let's get milking. Wow, in fact, for the third time, are we actually in a much bigger bullish pennant? That does seem to be what we're in. We have 2 touches at the bottom and 3 at the top, and I'll tell you what I think is most likely. And guys, how does a bullish pennant work? What exactly would happen? We'll take a look at that here. It's pretty huge. As well, Bitcoin's still finding that resistance right here in the golden pocket of the last year, of the last 12 months. What does that mean? If there is a breakout, what is the target for this entire thing? Will we even get a breakout? Also, for the past year, we've been in this descending channel basically, and now we're still finding resistance and support at this crucial level here. Will that continue? And guys, we're still watching this MACD cross on the weekly chart. Will Bitcoin rally into the halving? Will there be a pump and dump? Will there be a dump? Will there not even be a pump? What's going to happen? Did we already see the pump? Wow, and Bitcoin failed its 9K hurdle late last night, guys. We had a huge green candle late last night, and we got rejected exactly where I was watching the chart right here. You can see that's where we got our third touch. These are 4-hour candles there. So we failed that hurdle, but data suggests that investors are extremely bullish, and we'll get into some fundamental reasons why that's going on. And as well, the Bitcoin hash rate hits an all-time high just days before the halving. We'll show you this chart and what that means. So guys, without any further ado, let's do this. What's going on, everyone? Welcome back to another exciting episode. Day 3, you guys. My last 2 videos, in fact, were banned. In fact, we can take a look here. We have a lot to get into with these charts, but I want to start off here because this is very important here. Yesterday, not only myself, but Crypto Zombie, Altcoin Daily, Data Dash, Chico Crypto, Crypto, Kevin Svensson, and that's just the people that I noticed late last night that were all shadow banned. If you're subscribed to any of them, you might have seen that their feeds were completely removed from the subscription. You could not even search the title of their videos. They were completely gone. And actually, just about 2 hours ago, my video finally got unshadow banned after about 24 hours. And you can see here on the 60-minute chart, the views started to slowly creep back in because, you guessed it, you can actually search the video now and it gets recommended. But when it's shadow banned, you'll never see it. So guys, this is still going on. Most likely this video will be hit as well. Once YouTube realizes that it's not spam or whatever, they unleash it, but it takes about 24 hours sometimes. So that's like the sweet spot. If your video misses the first 24 hours, nobody really cares. Crypto changes by the minute. So the videos aren't even relevant more than like a day or 2 anyway. So just wanted to let everyone know that, because guys, that is happening. It's not happening to everyone, but it's happening to most people. But before we get into everything, guys, let's do this. We're going to be giving this bad boy away real soon. So guys, make sure to leave a comment. Make sure to smash the dings. Make sure to smash the subscribes, smash the likes. So guys, we've been talking, as you can see from the thumbnails from the past 2 videos, we've been talking about this potential bullish pennant, which it's still respecting these lines. We had them drawn here, but they're still respecting these lines. Now, the reason this is such a more potentially bullish one is because of this. So the bottom, this is where Bitcoin has bounced twice on the bottom of this potential bullish pennant right here. And guys, what exactly is this line? What exactly is this line that's hitting? This is a line, again, some of you guys might know this. It's a line that goes back over 6 years. Okay, this is huge. We can keep scrolling back. Let's keep scrolling back, actually. Look at this. It's still on this. You can go back to 2014, 2015, and this line is still there. So that is where we're finding support now, and we're consolidating in this very tight range. We have 3 touches on the top here. Okay, 1, 2, 3, and 2 on this very important line here at the bottom. So that's absolutely crazy that we're still consolidating and finding support on this line. I remember a week or 2 ago, if you guys were watching, we were saying if we break above this, it would be extremely bullish if we were able to hold this. And so far, we have been. So bullish pennants, if this is in fact what it is, they're usually very bullish. So let's actually take a look at this here real quick. This just goes into an example of a bullish pennant like this. We have a very, very sharp increase, very small area where you consolidate, and then it continues higher after it gathers enough energy. In this example, the price makes a sharp vertical climb before taking a breather. I can hear the bull stomping and revving up for another run. What's interesting here is the size of the breakout is around the height of the mast, or the size of the earlier move. So it's about this area here. So let's actually do that here. So basically it would be from here to the mast, which is right about here. Okay, so we take that, and let's say it broke out here. That would be roughly, that would put us to about like 98, roughly, if this broke out fairly soon, you can see on this pennant. And then final thing here, the pennants may be small in size, but they could be huge price moves, so don't underestimate them. So it could even be bigger than that, but basically what they're saying is these pennants could be pretty small. Okay, this has only been forming for about a week now, but it still could be a massive price move. Wow, no, on the daily chart here, we have pulled up on Bittrex. We have this Fibonacci pulled out. And guys, it's still basically finding support right in the middle of this golden pocket here. This is just such a key area. No surprise at all that we're spending so much time in here. This actually started all the way back in June of 2019, so pretty much almost 365 days here. Definitely a macro trend here, but we've been facing it for a while, and I don't expect that this will be incredibly easy to break out of. So again, if we're going to get a break, it most likely would have to form a pattern like this before we got it. So I think that's good that we're seeing that form there. Still bouncing on this descending channel here, going all the way back to actually starting in about June of 2019 as well. Everything's kind of culminating in this very long yearly pattern, I think, because again, guys, I mean, this is probably one of the best things to look at. In terms of this, we're still kind of in this descending pattern, and until we break this, we're still kind of making lower highs. But as soon as we would break 10.5, then we'd be setting our first higher high. So watch out for that as well. On the weekly, we're getting that cross. And now, guys, I really want to jump into something important here. We're going to be talking about hash rate, which is huge, but we're also going to be talking about this failing at the 9K hurdle, guys. So before we do, if you guys are interested, make sure to check out the links in the comments pinned below. If you're interested in learning more about TA, definitely check out T4, where we combine knowledge and lines. Okay, absolutely huge. There's also other links if you guys are interested in a ledger, or if you're interested in starting to get trading, definitely check it out below. So let's start off here. So we have observed a significant increase in new money entering the ecosystem. According to this CoinDesk article here, several exchanges and retail platforms are reporting a surge in Bitcoin deposits, signups, credit card purchases since the low that took place on March 12th and 13th, around that when we bounced back into that $3,000 range there. Matthew Dibb, the co-founder of Stack, a provider of cryptocurrency trackers and index funds, stated. So that's what he said there. The ecosystem looks to be expanding. Each unique active address does not necessarily represent a single person, but a single person or exchange can hold multiple addresses. Large investors probably, have many different addresses. Say they bought 10,000 Bitcoins. They're most likely not going to put 10,000 Bitcoins into one address. They're probably going to disperse them across different addresses. It says here, looking ahead, observers expect the number of active addresses to continue rising after this halving. We'll see the higher account openings at the end of May if we go through 10,000, without a doubt. If history is a guide, crypto has potential to see a price pullback after the halving. But guys, in previous halvings, we had massive pumps, and we've seen some really nice moves lately. But guys, this came right after already we received a massive dump. So remember, we've already received a absolutely huge dump right here, by far the biggest on this chart. And we've kind of gone up, obviously, for the past 7, potentially now making it 8 green weekly candles. This is just getting started, so we don't know yet. But I mean, this is not necessarily like a crazy massive pump. It's more of like we're kind of still kind of at the break even, because we were here. Everything that happened with the world absolutely destroyed every single market. This was not only something that happened on the Bitcoin charts. So it's kind of weird, because we've already seen a massive dump, okay? Probably the biggest dump we've ever seen. Definitely the biggest dump we've ever seen in terms of like sheer numbers, I would say. Especially also in like a single short time frame. It was like in one day, basically. So again, I don't necessarily think that it's going to have to repeat exactly as the previous halvings. I think this, again, each halving could be slightly different. Maybe this one could be massively different. But then it says here, Matthew Dibb expects active addresses to reach levels seen during the height of previous bull market in December of 2017. The 7-day average of active addresses clocked a record high of 1,100, a record high of 1.19 million on December 18th, 2017, the day that cryptocurrency clocked a lifetime high of 20,000. So the exact day that Bitcoin hit its current all-time high was also the day that the active addresses clocked their all-time high of 1.19 million active addresses. So from a technical standpoint, the cryptocurrency's repeated failure to keep gains above 9,000 is indicative of buyer exhaustion, it says here. But I would argue that while that may be true, we're also seeing seller exhaustion, guys. We are seeing sellers not really able to make much of a move yet. Okay, we've already had pretty much the sell-off of a century right here. And it just, week after week, we've been seeing it getting pushed down and down. We got rejected off this 100-week moving average for a while, but we eventually got above it. And we're seeing, I definitely think, even though we might be seeing buyer exhaustion right now in the short term, I think overall, mainly also what we're seeing is seller exhaustion, right? People don't want to sell. And then we have here, Bitcoin hash rate hits the all-time high just days before the halving. As Bitcoin halving gets near, more miners than ever are trying to get the most out of the network as possible. What happens after? So just days before Bitcoin block rewards are reduced by 50% with the halving, it's reached its strongest point ever, measured in mining hash rate. According to the data from Glassnode here, one-day average mining hash rate of Bitcoin blockchain reached 139 exahashes per second, trouncing previous all-time highs. And I have a bigger version of this chart here. You can see these yellow lines here Look how high that is. You can see it is correlated. You see when we had that dip, obviously the hash rate dipped a lot back in the very end of 2018, beginning of 2019, when we hit that $3,000 range, which is our current low of the last 3 years. And again, you just see hash rate increasing and increasing, which is very interesting there, right? This increase in hash rate represents the equivalent of more than 71,000 new Antminers S9 machines on the network, which is the most popular Bitcoin miner, which can pump out 13.5 terahashes per second each. Okay, huge. The strongest incentive for miners to jump back in has been Bitcoin's recent price performance. Okay, so people are joining back in because Bitcoin's become very bullish. Bitcoin has since recovered back from the Black Thursday crash back on March 12th when it went to that area in the low 4,000s, high 3,000s that we talked about. And miners are currently trying to extract as much Bitcoin as possible before their profits are cut in half. Now, it's definitely going to alter the ecosystem. It always has every time, the other 2 times it's happened. But again, overall, this is seen as a very bullish thing for Bitcoin moving forward. And guys, like we've been saying for a few months, we might see some volatility specifically around this halving. But overall, the trend after the halving is bullish. So guys, thank you so much for watching. Make sure to check out those links in the comments if you guys are interested in learning more about TA, if you're interested in starting to trade, if you're interested in getting a ledger. And also make sure to drop your comment so that you can be entered to this ledger. I think actually the next video will be the last one to enter before we give this one away.